everybody, this is Bill the Adjuster with your smart claim tip. I'm buying a new home. What should I look for in a homeowner's policy? I get this question probably 50 times a year, once a week. I would say I get this from people that I meet that know what I do, and they say maybe this is a good time to ask this question because most people buy their homeowner policy when they buy their home, either through referral from the real estate agent or it just gets in the process. They pick a name, they need to get insurance, check off a box, when in fact you really should know a few things and really look out for some real basic ideas. Now granted, I could do this for 5 hours, so I'm going to give you the top hits of what I think are the most important, and here they are. Number one, here's my brand new beautiful home. All right, if I bought this home, it's not my home. If I bought this home, it'd be a really large investment. I'd really want to make sure it's covered. And I look at this home and I see construction issues that are potential leaks. I see valleys, I see chimneys, I see the way the height of the garage is, I see the soot at the chimney, and I see potential claims in a house this large. Now you buy this home, I don't know, $500,000-$600,000, and the question is, can you afford a $20,000 or $30,000 or $40,000 issue if something happens? And most likely brand new homeowners, that is an issue, right? That's a big chunk of money to potentially have to spend for an issue that happens probably from a weather event, most likely. So the top things and the things you need to look for, number one, you should have an all risk form. The generic terms for those are an HO3, a homeowner's 3, or a homeowner 5. Homeowner 5 is a great form. That solves most of the problems I list below. So if you speak to somebody, that is kind of an executive policy. But for the most part, the HO3 or the all risk form is where the public stays. You need to have a fixed deductible, not a percentage deductible. Percentage deductibles tend to be extremely large. They're a percentage of the coverage of the home, not a percentage of the loss. So if let's say I set a 5% deductible on a $500,000 house, that's a $25,000 deductible on every loss. So if I had $23,000 worth of damage from a storm, I get zero. So you don't want to have a percentage deductible. Get a fixed deductible, something you can afford. Still, the most common deductible today is $1,000. Doing the math with the average number of claims, a $2,500 deductible does not seem to pay off based on averages. Also, you need a policy that has no required opening for wind or rain damage. This would mean that if your roof leaks, you're covered for the damage created to the interior of the building and not having to have a required opening in the roof, meaning the wind tore off a section of the roof before you would have coverage for the wind rain damage. Policy like Farmers that's out there today, a lot of those policies, even though they act like they're an all-risk HO3 form, they actually contain a required opening provision. Therefore, you're not really covered for a roof leak. Pretty big issue. We probably do, 4,000 or 5,000 roof leak claims in a year, pretty commonly. They would not have coverage with that form. All right, a roof schedule is part of a policy that says that your roof will be paid at its depreciated value, much like that of a tire, right? So you buy a tire, you drive it for 4 years, you have a road hazard, they only give you a couple dollars for it because the tire was basically worn out. So they're doing this now with roofing, and they put a roof schedule in with fixed depreciation based on its age. Generally, if you read your declaration page and it has the age of your roof listed, it may be built into your policy. You don't want that. You want a full replacement cost provision for your roof when it's damaged, and not one that pays just a few dollars if it was 20 years old. Most roofs fail at about 20 years old from storms or from events, and these provisions in the policy pretty much eliminate coverage for those roofs. Most of you have had or seen or heard or know somebody that had damage from the last hurricane/storm, and that you've had people with flooded basements and backup of drains. This is good coverage to get. It's not included in an all-risk form. It is in an HO5 for the most part, but you want to make sure you have backup and sewer drain coverage or sump pump coverage, whichever it's entitled or labeled under your company. But this is very important coverage to have. If you have a sump pump, you want to make sure you have sump pump coverage. If you don't have a sump pump, you also want to get backup of sewer and drain. They kind of overlap each other. You do want to cover valuable articles like an engagement ring. Theft on jewelry is limited to $1,500 or even $2,500 on most policies, which is high, $2,500 by the way. Most are 15. And there's not many engagement rings out there today that are valued at $1,500. They're generally more than that. So for a few dollars a year, you can add the limit of coverage on the ring to cover it for mysterious disappearance, meaning I don't know where I put it, I lost it, I put it down, I can't find it. That'll pick up coverage for that. Without that, you don't have a lot of coverage on the ring, especially for theft. And service line coverage. It's a great deal. Service line coverage covers the lines that feed your home from the in and the out. And they can be $5,000, $10,000 to fix these lines. These coverages are only a few dollars a month. I know people get them in the mail all the time and get offered the coverage through the utility itself. Believe it or not, if you call your insurance company, it's probably going to cost you less to get it through your insurance company for the same coverage. My neighbor just got it for $3 a month, and ultimately it's $10,000 to $15,000 in coverage, which you would never pay off. Meaning at $3 a month, you'd never pay off $10,000 to $15,000. So it's a great coverage to have. Ultimately, most people do deal with it when they have a drain issue or a water line coming into their home. They'll end up using this coverage to pay for a bulk of that bill. So ultimately, that's going to give you peace of mind. That's what I got when I Googled peace of mind. If you have a good policy, remember this pays you. Premium is secondary. Make sure you get a policy that covers you in the event of a loss. You're comfortable with the deductible, and it covers you for most of the normal things, and you can deal with anything outside of that. But if you have those basic coverages, I think you'll be in really good shape and protect that new house. All right. Again, thank you so much for being on the Smart Claim Tip. We're here to answer questions. If you want something specifically answered, you can email me directly at smartclaim@metropa.com. You can also email anyone who invited you on the call. And thanks so much for being on the call, everybody.